Could you tell us about a particular situation that you had to overcome?
That's a really deep question. I don't want to answer this like a job interview question, so I'll give you a deep personal answer. At the moment, sitting in Switzerland, I've been working the past few years, jumping between Luxembourg and Switzerland in particular. I'm working for Credit Suisse for their financial intermediaries desk. They call it external asset managers, but in essence, in the industry, it's known as IFAs, independent financial advisors, or financial intermediaries. It's a pretty interesting area of the bank. It's one of the few areas that is still growing rather rapidly. And the reason for that is, I mean, for banks, it's a new industry rather. It's only been around for maybe 10, 15 years max. And it's really picking up steam now. And the reason is because in the banking industry, it's looking like it's starting to be a death by 1,000 cuts, right? You have all of these different services that are being offered by increasingly independent and innovative service providers. And it's sort of hollowing out the Goliath banks that used to sort of offer a holistic package on the roof. And increasingly that's coming under attack, so to speak. And the banks recognize this. So what they offered were these EM desks or financial intermediaries desks that in essence outsource the banking license to third parties, and give them access to services that they might not yet offer. So for example, you have, it's quite frequently, you'll have a very successful private banker that wants to become independent just because you don't have to share any fees. It's always more lucrative to be independent, obviously, if you can do it. So they become an entrepreneur. They set up their own shop. They become an independent advisor, but they're still lacking a license, or they need a custody solution, or they need brokerage services. And what they'll typically do is they'll sort of, again, act as an independent advisor and then just use typically in my industry between 5 and 8 custodian banks, which Credit Suisse is one of. So this is one area that I wanted to get into from the get-go. That's where I've built my career. Basically as a relationship manager in that field, because I recognize that even though, I mean, in a perverse way, it's a bit of a death knell for the big banks. It is one of the few areas that's still really growing rather rapidly. And I mean that it was kind of crazy to watch this during the last 5 years. You could really see the EM or financial intermediaries department really grow its influence, also politically in the bank's internal politics, along every key metric, along top line growth, along assets under management, assets under custody. I can tell you, for example, at Credit Suisse, for Northern Europe, the EM business is half of the assets under custody. As versus ultra high net worth individual banking, high net worth banking, even retail banking, it's half of the total assets. So that kind of shows you the direction that it's going in. So that was a little bit, I anticipated that. That was my motivation for getting into the EM business. I started off in Zurich, but when the European strategy became more important, Luxembourg as a headquarters became more important. They had some restructuring that happened, and they basically they sent me out here to do business development and to also take care of a key client book. I have 3.5 billion assets under management in my name, and I shuttle back and forth between Zurich and Luxembourg.
Cool. So a lot of travel in your work at the moment.
I travel a bit, especially because I also cover mostly European markets. So that means I need to go, well, this was before COVID anyway, and it's been a little bit tricky the last year and a half or so. But yeah, UK is huge, London in particular. Also Sweden is massive for us, and Netherlands. So that's the main areas I'll travel to. France occasionally. France is starting to pick up a little bit in importance. But yeah, mostly UK, Netherlands, and Sweden. So it's been very different between pre-COVID and post-COVID, particularly the traveling bit. So I'm traveling a lot less now, but I guess you could divide my work up into business development, just relationship management in that sense, and account management. And the relationship management and account management, for me, that's sort of part and parcel. That's sort of what you could call the farming bit, and that's just maintaining and growing your existing book as much as you can. So the account management bit of that is sort of more the operational part, making sure the base, clients are happy with the basics. You're covering all your bases, so to say. Keeping clients satisfied at a minimum. The relationship management piece goes a little bit beyond that. So you're going the extra mile. You're making sure your clients are really thrilled and excited by the services you're providing, and that also helps you attract more business with your existing book. So that's how I would segment those two things: account management and relationship management within the farming piece. And then the headhunting piece is really trying to go out there and get new business, form new partnerships with licensed institutions or smaller advisors. And I'd say the farming piece is probably 60% of my work. And within that, I try, a lot of work goes actually into just sort of, because it's a large book, it's 3.5 billion. So a lot of work goes into making sure operationally everything's smooth. I'd say within those 60%, probably it's 70% just covering your bases, and then 30% of that is going the extra mile and trying to grow your top line and trying to attract new assets with your existing base. And then 40% is headhunting. And within that 40%, I'd say before COVID, probably 20% was active traveling, and now it's just a lot more social media, outreach on LinkedIn, Zoom calls like we're doing. That's how a typical day looks. To caveat it a little bit, I'm putting it in past tense now. Again, I got into this business 6 years ago. What excited me was exactly the transgressive nature of it. So it's officially the EM business. It's part of private banking. I think it's very transgressive in what it does, in terms of how I described a few minutes ago, how it outsources the custodian bank's licenses, and how it really drives that change, that decentralization sort of from the Goliath high street or private banks out to more diversified third-party service providers. So that's what really fascinated me. Increasingly, I have to admit, and even before I got into the industry, I'd heard this from all of my private banker friends. They were very frustrated with the amount of time they have to put in fulfilling requirements and regulations, and basically a lot of internal politics. I took that with a grain of salt. People love to complain, but the EM business, I think, was different again for the reasons I described. But I think increasingly, even in just the 5 years I've been with the company, it's become more and more clear that there's a tremendous amount of regulatory creep, especially with MiFID 1 and 2 having come out. That was a massive change, and I have to say that's also creeped into my business, right? So I have to say that's a little bit less exciting. Just recently, I don't know how closely you followed this, but obviously beginning of year, Credit Suisse had quite a few scandals. You had the Archegos blow up. You had the Greensill issue, and you had a change of the guard. So a new chairman came in just a few weeks ago, and basically he said something very interesting. I'm a relationship manager. That's my job description. And he said, from his point of view, RMs or relationship managers are no longer relationship managers. They're actually risk managers. EM businesses transgressive model, I think, just isn't going to work quite as well anymore going forward, just because, and especially Credit Suisse at the moment, but I mean, I don't want to single Credit Suisse out. If you go back a few years, it just as easily, it was UBS, Goldman's had plenty of scandals, JP Morgan, I mean, take any of your pick, and the risk appetite just isn't there anymore to do this kind of business. So it's, I think, increasingly, and this is a trend that's been going on, but it's sharpened in the last few months and years. It's very much a preservation and cautious stance that these banks are taking. So that on the downside, and that's also why we talked about this just before the interview. Actually, I'm very much looking into changing gears. The digital asset space, the crypto industry is very much on that cutting edge and fulfilling a role that the banks don't want to, or actually more likely they can't fulfill that type of role. And I also think that that's where you'll find that the kind of growth that's really exciting. That's where you'll find, for the hedge fund business, for example, that's where you find alpha that just doesn't exist anymore in the legacy space with negative interest and zero yield. That's where you're seeing all this innovation happening in the DeFi space and so on and so forth. So I for the same reasons that I got into the EM business 5 years ago, I see the digital asset space is very much where things are headed. As you say, the industry is very, very, very much nascent. So it's a perfect opportunity to potentially do your own thing. I've also started a YouTube channel, for example, where I comment on current news, give some commentary. But in terms of building a business, I think it's a super opportunity. There are a few players that obviously they've been there, and again, in quotation marks, early, which means 2017. So that's how nascent things are, that have managed to somewhat build a brand and a reputation and a name. I'm considering joining one of those outfits. I'm in conversations with a few to do their business development. But I think just as easily, if the right opportunity came up also with these ICOs and all of this innovation happening on that front, it's really fruitful ground. If you see an opportunity and you want to make a significant shift in gears and you're really convinced by it, then you should go for it, because the problem I see is a lot of people, they wait for permission, they wait for things to stabilize, and they wait for sort of an authority figure to officially tell you that this is now okay, this is the way to go. And the problem with that is that first of all, you could be waiting forever. You could get gray hairs until that happens. And second of all, when you get to that point, all of the alpha's gone, all of the growth potential is already let out. That means everybody's already taken their share of the profits, already participated in the potential of growth that was there. I think people have a misconception. This might be a fault of our schooling system, is that you're waiting for permission, waiting to be told what the accepted way of thinking is, or what the official path is. But the problem is those things only appear clear in hindsight. It's just in the nature of things that history is written by the winners. If you look back, everything just seems so crisp and clear. If you go back, to the early days of the internet in '97, everybody looks back and goes, okay, with the launch of Netscape, that was the shot around the world, super clear. You should have held through the internet bubble popping. You shouldn't have sold off Amazon when it dropped by 90%, which it did. It did repeatedly. You should have just held on. These things are always clear in hindsight. But looking forward, there's always sort of the fog of doubt is always swirling about. So I think if you have a conviction, then you should go for it. I'll put a caveat to that. There's always things you need to take into consideration. People have different risk tolerances. People have different circumstances. It very much depends where you're at in life. If you have a family, for example, you have little kids that are depending on you, that might be something you need to consider. You need a stable income source, totally understood. If you're, in a different age bracket, you're in your mid 60s, you're looking to retire, then don't put your entire nest egg into something that, even though you have conviction, you have to take a risk-based approach where, what if this goes completely tits up? You can't be left destitute. So just with that caveat. But otherwise, if there's even a decent chance and you're somewhat comfortable with the risk and you have strong conviction, then you just should pull the trigger. And I think not enough people do that. if you switch off the news feed for a weekend, I mean, it's like, and you turn it on Monday, you go, what the hell happened? Honestly, keeping up with the news is a full-time job. I probably spend between 6 to 8 hours a day looking into different protocols, different projects that are ongoing, regulatory shifts, political shifts. And I do that on the one hand, because it's important to keep on top of things, but on the other hand, it's also just a personal interest. So it doesn't feel like work. It's just something I'm really keyed into and I'm very interested in. I don't think you necessarily have to do that. Some people prefer to just sort of focus on a more narrow field. Maybe there's a project that they're very into that can cut down on some of the time, although it also depends on how deep you want to go. I mean, because you can cover these things from so many angles, like I hinted at. I mean, you can look at the shifting legal landscape around these things, the regulatory landscape around these things, technologically, financial. I mean, there's really no end to it. So I'd say if you want to, you can probably fill your whole day with it. You don't need to. It really depends on how wide and how deep you want to go. I don't want to answer this like a job interview question, so I want to give you some insights. I'll give you sort of a deep personal answer. The biggest challenge was I'll quickly go back to my childhood. I think other kids have this as well. I was maybe a little more extreme on that end. I wasn't on the spectrum or anything. I wouldn't consider myself autistic, but I definitely lived a lot in my head. I would intellectualize a lot of things. I would overthink a lot of things, and that also made it difficult, at least early on. During primary school and so on, it was difficult for me to relate to other kids in terms of sports, in terms of playing games. I didn't know how to engage, because again, I was living in my head. I was analyzing everything. I was over intellectualizing things. People that are sort of that naturally are super social, engage with other kids very, very easily. This might be hard to understand, but it actually has a huge negative impact on your quality of life, because I 100% believe that your happiness depends on not necessarily what you're doing, but who you're doing it with. So, I mean, plenty of people working what you would call a boring 9-to-5 job, if they're in a fantastic team with great colleagues, having fantastic conversations, having fun, poking fun at each other, rubbing each other a little bit, just having a friendly social environment, they'll be 10 times happier than, an analyst working at Goldman Sachs in a cutthroat team without making any real human connection. So to make things short, I realized that really early on, and it's really something I had to teach myself. I spent years just practicing public speaking, studying people. This sounds crazy, but it's actually true. Studying people's facial expressions. How do they react if I'm communicating in this way? How do they react if I communicate in that way? And just sort of fine tuning that to the point where I think I got better at it than 99% of people that, in quotation marks, do that naturally. And it also reflects the field that I went into. So I went into a relationship manager field, which, if you rewind to sort of my natural abilities as a kid, you would say, wow, that's surprising, but it is really something that I very much worked on. And as part of that, I'm also a bit of a nomad. I applied what I learned in different cultures with different peoples of different backgrounds. So I've always been fascinated in sort of testing that a little bit. So, I mean, that's why I did, as soon as I could, I did an exchange in Singapore. I studied at Singapore Management University. So when I discovered Asia, became fascinated with different cultures there during my travels. Very quickly realized when I visited Hong Kong, I love that city. I thought, my God, this is the New York of the East. I want to work here. Through my alumni network, I met a guy, I convinced him to hire me. I spent 2.5 years working in Hong Kong, moved back to Zurich, quickly moved down to Luxembourg. And all of that wouldn't have been possible if I didn't really dig down deep and worked on my people skills. So I think on the one hand, that was the most challenging thing I've ever done. Took years and years and years, but the benefits are just, I can't even tell you, it's tremendous, from professionally to how I connect with friends now, to just also my family. It really changes everything. I probably put it into crypto. No, but I think I actually looked into this. And if you look at the statistics, most lottery winners that have that kind of huge payout, like 5 million, 10 million, sort of a life-changing payout, it's unbelievable the amount of people that wind up in jail or suicide, wind up dead. It's way above the national average. And I think the reason is that they're unprepared for it, let that money corrupt them. They do things that, it could also be, it tends to bring out really negative sides. So I think the best thing you could do is invest it. Don't change your lifestyle whatsoever. Do it gradually. Don't overdose on the prize money, so to speak. So to answer your question, I would put it into a long-term investment, which for me is the crypto industry, because I have long-term conviction, and I wouldn't change anything about my lifestyle.
Looking like a true financier. I like it.
The number one book I would recommend is The Sovereign Individual. I mean, this was, I can't even tell you, mind-blowing over and over again. I listened to the audiobook. It's just how I prefer to learn content acoustically, but you can obviously get the paperback as well. And the crazy thing about this book was it was written, I believe, in 1997, and it's just so spot on. It talks about a non-sovereign money. It talks about encryption as challenging nation states, a future economy that's global, that's remote. It's so crazy now, 25 years later, only now are these things that I'm starting to see, but I can't even imagine people with such vision and long sight having already sort of peeked behind the curtain and being able to talk about these things. So I think it's an unbelievable book. In terms of podcasts, I mean, there's so much good content out there right now. What I like to listen to is Lex Friedman. He's quite popular, but he also has just amazing guests on covering all kinds of subject matters. So there's a little bit of something for everyone. Also helped me discover things that I would never have taken an interest in. But when you hear the interview style and the experts he has on, it's just absolutely fascinating. To keep up with current developments in crypto, I also enjoy listening to Anthony Pompliano. He has a good podcast. Joe Rogan's always good, but I don't think he needs my endorsement. The best way is through LinkedIn. I'm always on there. So Andrew Axelrod on LinkedIn, just key me in. It's not such a common name. You'll find me.